Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
I am Carol Masser with David Gora. Let's take a look at some stocks on the move. Bloomberg News Managing Editor for Bloomberg Markets Live blog, Christina Kino in the house with us. Where do you want to start?
Let's take a look at BlackRock, shall we? All about data centers there. So shares of BlackRock, ticker BLK, they finished today up just 0.7%, but earlier they were up more than 2%. And that is because their Global Infrastructure Partners unit agreed to buy aligned data centers from Macquarie Asset Management.
Everybody's buying data centers.
Everybody wants a data center, including BlackRock. So this is actually a $40 billion deal, which when you consider how much BlackRock has in assets under management, that's like a drop in the bucket. So I guess they thought that it was a pretty affordable data center deal. And interestingly, they're partnering with companies including Microsoft and NVIDIA in this endeavor. And they're going to be buying up Aligned. This is a company that based in Texas. They have 50 campuses. They have 78 data centers under management or in future development. So pretty promising in terms of BlackRock's foray into the space here.
And another big day for BlackRock reported earnings yesterday. We got this astonishing number that they've got $13.46 trillion.
It just grows and grows
under
and grows.
Management now. Inflows of about $171 billion. So news upon news when it comes to BlackRock.
Sounds like they've got, I guess it means other people's funds, but they got
cash
some funds to do their own thing.
Yeah.
Exactly.
Yeah. All right, let's go to Stellantis. What do you got for that?
Yeah, let's take a look at Stellantis, ticker STLA. So those shares have had a good day today. So they are the maker of Jeep SUVs. And for the longest time, they've struggled with market share in the U.S. market. But now they're vowing to invest $13 billion in this market for the next 4 years. And they're billing it as their single largest investment in more than 100 years. It's also being seen as by analysts as a way to counteract pain from the tariffs, because the company did estimate in July that higher duties will set their earnings back by about the equivalent of $1.7 billion this year. So that's not nothing. And our Bloomberg Intelligence analysts weighing in on the deal, they are saying that they would like to see more details, how exactly this will be deployed, and whether this is already part of their capex plan anyway, which is estimated at around 10 billion euros each year. So we shall see. But that news definitely contributing to the positive day for shares.
I always wonder.
Such a fascinating facet of all of this stuff, whether it's cars or pharmaceuticals, like how much this stuff is new and novel versus companies being like, oh, we've given thought to doing this before.
A corporate
we'll do
spin.
it now. Yes.
Well, and then you make a promise, a vow, right? And who knows, like whether it all plays out.
Yeah.
I mean, 4 years, where will we be?
3
3 or 4, yeah, 3.5. Just saying. All right, PNC.
Yeah, let's take a look at PNC. That did not do so well today. So ticker PNC, those shares down nearly 4% at 3.9% at the close. And they did get results today. Third quarter net interest margin missing estimates. That's because they did add more expensive commercial deposits. Those tend to pay higher interest rather than the accounts for retail customers. Though the good news is that loan loss provisions were less than expected. And that is consistent with the line that we've heard from Wall Street banks saying the consumer's totally fine. They're making their payments. They're not getting behind on their credit card bills. And, especially the top segment of that consumer base, the higher income customer base, still spending, still putting in deposits. And so this is kind of consistent with what PNC is saying as well.
Let me jump off of that. I mean, like here we are in earnings season. It's underway in earnest. These big banks can't buy or merge with any others. I mean, they're as big as they can be. When you look at a bank like PNC, other kind of regional banks, what are we going to learn over the coming days about sort of their appetite for mergers? Is that something you're going to be charting going forward? Do you think we're going to hear much about?
Yeah, absolutely. I mean, we've already seen some of those deals coming through. I mean, PNC itself actually is involved in an M&A deal. They announced in September that they're going to be taking over First Bank.
That's right.
That's a $4.1 billion deal. And, CEO Bill Demchak referred to that deal as basically them effectively buying Colorado. And so it seems like M&A activity, particularly
Gotta work
in the
on your
regional
messaging, babe.
Yeah.
No, I get what he's saying.
Yeah. He needed maybe some PR help with that one. But anyway, that's definitely in the cards for sure. PNC getting in on that M&A action, which we know has been very active this year.
I just want to add two more. United Airlines down about 2% in the aftermarket. That after it reported better than expected earnings for the third quarter, and they expect brand loyal flyers and demand for its premium seats to drive profit through the end of the year. And I think their outlook was pretty positive, but investors don't seem so enthused. And I got to mention JB Hunt. It's up like 12% here in the aftermarket. And this is coming after the company reported third quarter earnings per share that beat the average analyst estimate.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.